So this year alone, we expect over 165,000 meters of drilling on our exploration properties that we don't spend a dollar for.
Joining us for a conversation is Spencer Cole, the Chief Investment Officer for Vox Royalty. Mr. Cole, welcome to the show, sir.
Thanks so much for having me, Maurice. It's a pleasure to be here.
All right. Glad to have you join us today to discuss the unique value proposition before us in Vox Royalty, which offers a smart way to invest in commodities. Before we begin, Mr. Cole, please introduce us to Vox Royalty and the opportunity the company presents to shareholders.
Absolutely. So Vox Royalty is a high-growth, precious metals-focused mining royalty investment company that's listed on the TSX Venture and the OTC. The company was formed back in 2013, and since then we've been building one of the highest growth and highest rate of return portfolios of mining royalties on the planet. Since January of 2019, we've been the fastest growing company in our $70 billion industry, bar none.
Mr. Cole, share the merits that royalty companies, and in particular Vox Royalty, offers to shareholders as a hedge against inflation.
Absolutely. So I guess most of your listeners would be aware of the inflationary environment that we find ourselves in today. Typically in times of high inflation, commodities outperform, just given, they're essentially a boat in the sea of the rising ocean of inflation. But within the commodity complex, royalty companies have outperformed every other commodity-linked asset class over the last 10 years, from the physical metal itself to the mining companies themselves and the various indices that cover those mining companies. And part of that reason is because royalties offer all of the upside that mining companies offer. So exploration success, production increases, mine life extension, without any of the typical downsides, such as capital cost overruns, operating cost inflation. Royalties are typically just a percentage of top-line revenue that expose royalty company investors to all those upsides without any of the downsides, which is largely why the royalty companies have considerably outperformed all those other commodity-based benchmarks over the past 10 to 20 years.
Now, Vox Royalty employs a unique value creation methodology that allows the company to grow organically. Now, for someone new to the concept, what is organic growth, and can you provide us with some examples from your property bank?
Absolutely, Maurice. So there are two main types of growth in our industry. One is acquisition growth, which listeners would find pretty straightforward, just going out and buying new royalty investments. The other aspect of growth, which can be much more lucrative for investors, which we as a company at Vox really focus on, is what we call organic growth. So our technical management team, which comprises of mining engineers and geologists, when we conduct due diligence on a new investment, we look at what's the value in the ground today, but more importantly, how do we project that value increasing over time as the size of the mineral resource expands, as production is expanded, and as the operation continues to hit their key milestones. So when we refer to organic growth, it basically means as our royalty investments mature, and as they, like a bottle of fine wine, as they mature and increase in value over the years. And so we've been incredibly successful over the past 7 years at picking royalty investments at the perfect time, or almost like event-driven investments, where we can see great value today in the ground, but more importantly, we can see huge organic growth milestones where we as Vox don't pay a single dollar. The mining company that's progressing that property, they continue to invest money in the property, and our shareholders get a multiplier effect on that original investment.
How does your technical team fit into the narrative of value creation?
Our technical team, it comprises of mining engineers and geologists, and really the key part of our business is identifying and evaluating the right mining properties. So, for example, one key attribute that we really focus on is picking properties that are likely to come into production. So I'll give you an example. Last year, we acquired a gold royalty from a hearing aid technology company, if you can believe it. They'd historically been a listed mining explorer, and then that shell company was hollowed out and a technology company was dropped into it. In our proprietary royalty database of over 8,000 royalties, we could see that this shell still held this really interesting gold royalty. And our technical team basically formed the view that this project is a winner and this project is highly likely to be brought into construction. Sure enough, within 18 months of us acquiring that royalty asset, we acquired it for $200,000, and it gives us 1.5% of revenue from that mine. Within 18 months of making that acquisition, the mining company that operates the property has just announced that they're going to be spending $73 million to build that mine. So, in terms of the technical due diligence, it's ultimately picking the right projects from an engineering and geology perspective, so that we have an abnormal number of winners in our portfolio, and investments like that $200,000 end up being a 10, 20, 30x a targeted rate of multiple on return on investment.
That's a great combination and example of your technical and commercial success. If you would, sir, walk us through your property bank and highlight the potential for significant option value.
Absolutely. So within the Vox portfolio, we have 54 royalties. And importantly, those 54 royalty properties cover some incredibly large ore bodies. So in total, those 54 royalties cover over 35 million ounces of gold equivalent resources that those projects encompass across 30 separate mineral resources in the ground. So, for us as a $100 million company, investors in Vox get access to, a spectacular amount of metal in the ground, at a fraction of the cost that they would have to pay, for a mining company that had exposure to such a large sort of metal endowment.
As we leave the property bank, sir, what is the next unanswered question for Vox Royalty? When can we expect a response, and what will determine success?
Absolutely, Maurice. We've got an incredibly exciting 12 months ahead of us, with a huge volume of catalysts expected to hit over the next few months. One key metric for us, and that the market is keenly focused on, is organic growth in our number of producing royalty assets. So when we went public in May of last year, we only had one producing royalty asset, but we told the market and we told our investors, watch this space. We're expected to organically increase that to a multiple of that over the coming 12 to 24 months. Sure enough, we've delivered on that. We now have 5 producing royalty assets, and by the end of 2023, we expect that will organically grow to 10 and potentially above 10 producing royalty properties. So, as your listeners would understand, then that translates into significant revenue growth over the coming quarters for Vox Royalty Corp. So that's growth in producing royalty assets that we expect over the coming quarters. Also, in terms of our 30 exploration stage royalties, we have a huge volume of partner-funded drilling on those properties. So this year alone, we expect over 165,000 meters of drilling on our exploration properties that we don't spend a dollar for. So we're very fortunate that our operating partners will fund that entire drilling campaign, which is a huge volume of drilling. So on a monthly basis, Vox shareholders are gifted with a huge volume of exciting discovery news flow and development news flow, as all of our various 54 royalty properties are advanced further and further towards cash flow.
Switching gears, Mr. Cole, please provide the capital structure for Vox Royalty.
Absolutely. We have a very tight capital structure. We have less than 40 million shares out. We've got about 39.5 million. We've got net cash on the balance sheet of about $6 million. And we also have about $3 million of listed investments. So very strong balance sheet, no plans to raise equity at these depressed levels. When we look at where we're trading relative to our peers, we're trading at a price to NAV multiple of about 0.7 or 0.8 times, where our peers trade at 2 to 3 times that multiple typically. So, with us trading at these incredibly low valuation multiples, we have no plans to raise any further equity. So, we see a very simple and clear path to the share price re-rating, and that's just with all the organic growth that we already have embedded in the portfolio. So, lean, mean capital structure that we expect sets us up for significant growth over the coming quarters.
In closing, Mr. Cole, what would you like to say to shareholders?
Look, I think the only other thing I haven't touched on, Maurice, is over the last 3 months, there has been considerable consolidation within the mining royalty industry. There have been 3 separate competitors of ours that have been taken over. And so, the winds of consolidation are starting to blow stronger and stronger. And a company such as Vox, with our portfolio of 54 royalties, that offers considerable revenue growth and huge optionality and upside through further exploration success, we would see ourselves as being fairly high on the target list for a number of larger royalty companies. So the good thing we have is we can continue operating and growing in a really disciplined fashion as we have been. We don't need to do any transaction, but we certainly expect that we're fairly high on the takeover target list in this period of industry consolidation.
Last question, what did I forget to ask?
I think the only other thing I would sort of remind listeners is if they are interested in joining us on this journey as we continue delivering value as Vox. Our shares trade on the TSX Venture Exchange and on the OTC. So, we're really appreciative for your listeners' interest, and we look forward to welcoming them onto the share register. We as management own 15% of the company. 4 of my brothers and sisters are happy Vox shareholders, and they're constantly asking me what's going on. So, I would welcome many of your listeners to join us on this journey with us and our families as shareholders.
Absolutely. I'll be joining you as well, sir. Mr. Cole, for someone that wants to learn more about Vox Royalty, please share the contact details.
Absolutely. So listeners can go to voxroyalty.com or they can email us at info@voxroyalty.com. And we'd be happy to take any further questions or have follow-up calls with any interested listeners.
Mr. Cole, it's been a pleasure speaking with you. Wishing you and Vox Royalty the absolute best, sir.
Thanks so much for your time, Maurice.
The information presented on Proven and Probable is provided for educational and informational purposes only, without any express or implied warranty of any kind, including warranties of accuracy, completeness, or fitness for any particular purpose. The information is not intended to be and does not constitute financial, investment, or trading advice, or any other advice. You should not make any financial, investment, or trading decision based on any of the information presented without first undertaking independent due diligence and consultation with a professional broker or competent financial advisor.